Good evening, everyone, and welcome to another episode of Juwai IQI Canada Evening Talk. My name is Yousaf Iqbal, country head of Juwai IQI Canada. We are back with our special time of the that end of the month where we'll give you a global economic outlook with none other than Shan Saeed, our chief economist of Juwai IQI. How are you doing, Shan?
Good morning, Yusuf. I'm feeling fantastic. Thank you for having me again. Let me say from the very outset, you and your team, they have done a remarkable job of achieving $150 million of sales. I think you and your team deserve ovation. You have worked very, very hard,
Thank you.
starting with 3 agents, and now you have over 40 agents. So you have really understood the market. Your market-based strategy has really worked and your market intelligence report have been spot on. That's why the sales is going, and you and your team, they have really developed their skill set as per the market requirement. That's why more and more investors are coming back to you and seeking your guidance and advice how to take position in real estate, which is now the new global currency.
Thank you very much, Shan, for that. I would say that it's always, a team effort. We have got an amazing team here in Canada, and plus, our big global family of 20,000 agents. And of course, when it comes to the investors, we always say that the outlook by Shan, which economy is going to perform, what's going to happen in the world, where you could see the policies. I think that plays a very major role when it comes to investment part of it. Again, one more thing, I want to say to people, like on Friday we did our 250th episode of live talk, and this is so amazing, kind of response we're getting from the people, and the new things coming up. So again, congratulations to our team, who's been a part of it. Congratulations, and thanks to all the speakers, including yourself, Shan. I mean, doing this on a regular basis every month, and we're coming up, with what's going on in the economy. I think it's one of the best things which is happening. So thank you very much for that, Shan. So
It is my
Shan,
pleasure.
before I start into questions or anything like that, I was just going through your Facebook page. So I must say that if you want to follow Shan Saeed, follow him on LinkedIn. Look at his Facebook page, and he gives you a lot of updates on it. So I see that today you just put something. There's an Asia Economic Summit which is happening on September 30th, right? Organized by KSI on that, and you are one of the speakers in that. So tell us a little bit about this, and how we can maybe find more information after the summit or have a look at that.
Thank you, Yusuf. Yes, Asia Economic Summit is happening. It's organized by one of the top think tanks in APAC region called KCI. So basically, I will be talking about what's happening in the global economy, where to park your funds, what investors are thinking. And I will be sharing later in this presentation that most of the funds in Asia are moving into real estate. And that has been our main focus and philosophy in the last 10 years, that why investors should consider real estate as a new global currency that gives them financial protection, that gives them peace of mind, and most importantly, it gives them capital appreciation. So I think this I will be touching about. Plus, I'll be talking about the energy market outlook, stagflation, what is
Mhm.
coming, how you can play the game as central banks are printing more and more money, and how do you preserve your wealth in these tempestuous times.
Awesome. Looking forward for that session. We got somebody already joined. Tara joined us from Malaysia. Good morning to you, Tara. Thank you so much for joining us. So let's get the questions started up. Again, when you're talking about the stagflation, so Shan, there are talks about stagflation globally now. I still recall, I think it was in our last November 2020 newsletter, and lately in our talks, we've been talking about it a lot. Again, you have been spot on and had on the mainstream media by 11 months. So what's going on? What can we expect in 2022? Stagflation, is it here to stay for long? And the history is repeating after 51 to 52 years. 97 years is back. What are your thoughts on that? And I'll also share a screen as well, where you have given some information about stagflation on our monthly newsletter.
Yes, Yusuf, absolutely. We have been again spot on. We shared in a newsletter last November that stagflation is coming and a lot of advanced economies will be struggling. Right now, if you see Europe, UK, US, They are struggling to achieve macroeconomic stability. So, thanks to my networking, people who are smarter than me, that has been my philosophy. I sit with those people who are smarter than me. So, my journal strategy is I throw a question at my networking, and I know them for the last 33, 34 years from my school days. We have gone to same tuition centers, we have played hockey together, we have played cricket together. So I trust them more than anybody else. So when you have people who are on the ground and who have got various market intelligence report, and they're willing to share with you, so that is a huge advantage. So your networking, if they are smarter, then you can leverage from your networking. What is happening right now, with so much of printing money, and the growth is getting questionable in many advanced economies, the stagflation is showing its head. And as you rightly pointed out, history is repeating after 51 and next year 52 years. 1970 era is back. So what happened in 1970? That because of higher inflation, lower growth, and high unemployment, most investors, they took position in tangible assets. And intangible assets, when I say, it means they took position in gold, silver, real estate, and they really benefited from those asset classes. So I think when you have stagflation, commodities and real estate would eventually come out and emerge as a clear winner, because bond and equity market will stay volatile, because most of the bond and equity investors, they don't really hedge themselves against the currency risk. And right now US dollar is again getting stronger for no reasons. So whenever you have a currency risk, whether the dollar have an upside or the downside, most investors don't really hedge themselves. So once the currency risk it comes into these asset classes, especially equity and bond market, they are taken off guard and they don't know how to manage their portfolio. So I think we are heading back to the same era, and I would not be surprised if commodity prices stay high in 22, because we are end of now of 2021, and real estate would again become a clear winner. So I think more and more investors, as we go along with our presentation today, I will share that now investors have come to realize that equity markets are all time high, the valuations are high, and they will take a major correction. Bonds is the worst asset class to take position when your inflation is 5.3 and your yields are trading at 1.4. So you're already trading in negative. You're not making money in the bond market. So I think more investors are going back into real estate, and they're going back into gold and silver. Gold prices are quite subdued right now. They are manipulated. So, but eventually, real estate, gold, silver, they come out as a clear winner. So I think stagflation is here, thanks to my networking for keeping me ahead all the time. And now we have shared the slide that you are running. Mirror on 24 September, Wall Street Journal, Economist Magazine, Washington Post, Financial Times, all these newspapers and magazines are talking about the stagflation is here and it's showing its head, and investors are going back to the basic, that is, going back to the tangible assets. So again, we have made the right call, and investors who are following Juwai IQI or IQI as such, they're always ahead of the market by at least 2 to 3 quarters.
Amazing, amazing. You're absolutely right. You're always ahead of the mainstream, which is always good, and that's why I say, that when you are talking to us as a team, and we are talking about not only just one country, but we are looking at the global economic outlook on seeing what policies are going around on that. And again, as you rightly said, the investors who are looking for investment right now are looking into gold, silver, and of course real estate. They're taking position into that. So again, people who have joined us right now, Shan Saeed, our chief economist, is with us on our monthly global economic outlook. If you guys have any questions, please feel free to ask Shan. You can just put it in the chat box, and we'll try to answer these questions while we are doing our show with Shan Saeed. So, Shan, now, right now, you were also talking to me in your economic summit about the natural gas market. Now you have already hit the market with your oil forecast. $50, $70 for the year, and now you have revised it for H2 21 to for from 73 to 87. What's the outlook in 2022 and the main driver? Is it the winters, the shortages, the higher demand, and opening economies? What are the market insights on this, Sean?
Yes, Yusuf. Last 2 to 3 weeks, we have seen that natural gas market has been very, very hot. And at the start of the year, we said 50 and 70. It already hit the market. So in July, uh, we have revised our outlook for oil market, and it's now trading at 78, $79. So oil is almost up 58% year to date. So we said
Wow.
73 and 87 for H2, and oil market will stay in this region, in the region of north. In the last week, if I share the statistics with you, Brent was trading at 78, European natural gas was trading at 26 dollars mbtu, Asia coal was trading at $185 per ton. German 1 year power was trading at 108 euros per megawatt. And carbon emissions were trading at 63 euros uh, per ton. And these are all time high. Oil is up 3 years high. Asian coal is up 13 years high. Nobody was talking about coal 6 months back or even a year back, but now coal has emerged because people are, especially continents like Europe and even countries like UK, they are facing shortages, as you rightly pointed out. Winter is coming, there is shortages, demand is going up, supply constraints, and prices are going out of the roof. So now most of those importers, because 50% of European gas comes from Russia, so most of Russia companies like Lukoil or Gazprom, they are making money like big time. And most of those oil producing nations like Canada, GCC, Russia, Malaysia, they will tend to benefit from this rising oil prices. And that will give a lot of space to the government, especially in the fiscal side, and it will give boost to the government. So I think oil prices will stay in the northern region. Somebody asked me yesterday over chat on LinkedIn that, Shan, are we heading back to the same era of 2008 when oil prices were trading at $147.18 on 11 July 2008?
Wow.
I said,
Wow.
I don't see that range this year. I don't see a repeat, but I would not be surprised if oil is flirting around $100 per barrel in 2022. For 2022, we have already shared, I posted, but I will maintain the same stance. I always take one position. For next year, 2022, we at Juwai IQI, we are maintaining a bullish stance on oil, and we are saying 77 to $99 per barrel next year. The premise is based that demand is up, supply curve is a little behind, and there is demand coming mostly from Asia. China is leading from the front. There will be supply constraints. Because of supply constraints, demand, because the economies are opening up, more and more countries are getting vaccinated. Yes, the main issue of Economist magazine, if you see right at the top, it mentions about that natural gas and its bullish outlook, and the landscape of energy market is changing rapidly. Shell recently, because of the tornado in Ida, they cannot meet 80% of the demand. The demand is so strong. Countries like Pakistan and Bangladesh, they have moved from LNG back to oil. So because of the higher oil prices, this will add fuel to inflation landscape. That's why I'm saying, I'm sharing with you that uh, stagflation is here to stay. Inflation is not transitory, as Janet Yellen, the Treasury Secretary, and Jerome Powell, the Fed chair, said, inflation is just transitory, it will go away. No, inflation is here to stay. And how do you protect your wealth? How do you preserve your wealth? And you can only preserve your wealth when you take position in tangible assets. So I think oil prices are heading north. Last year, yes, 20th April, oil was trading at negative by minus $37.63. It won't happen again, and oil prices will continue to remain on the upsurge. And those countries that are producing oil, they will tend to benefit. So I think we are back in the era where you have higher commodity prices, and commodity prices will stay bullish for the next 2 to 3 years.
So you're saying is that all this from the oil perspective, we should expect the prices going between 77 to $99, and you're saying that in 2022 expected could be $100, and you think we may hit $147 maybe by the end of 2022 23. We don't know that yet.
No, I think that will be quite far-fetched to say
Okay.
it's going to hit $147. But $100, yes, the oil prices can flirt around in that range, maybe 105, 107, and then it will retreat because you will have more supplies. Global economy can't take the pressure of higher oil prices. Taking into account we are in a COVID situation where economies are struggling, governments are
Yeah.
struggling, people are getting vaccinated. So it will take another 1 year for global economy to recover. I have already shared in my latest newsletter that we can expect a fractured growth for global economy for the next 2 years.
So people who have joined us right now, we are having our monthly global economic outlook with Shan Saeed. The newsletter what Shan is talking about. If you guys would like a copy of that, you can always contact us, contact Team IQI Canada or any of the other teams. So this newsletter is basically which gives us information. There's a section from Shan Saeed for sure, which is about the economic outlook. Plus, it also shares the insights from different countries as well on what has happened in the market, how the markets are performing for different countries. So as Juwai IQI is in over 21 countries with 20,000 agents. If you would like to know about other countries as well, I strongly suggest and recommend that go through a newsletter on that. In fact, that gives me a good idea, Shan. Maybe I should do one of my shows just going through the newsletter from all the countries for people to understand that how this is going on right now and that. So that would be also great on that. So
Yes,
Sean,
totally
yeah,
agree, Yusuf. If you can run through the newsletter so that those investors or people who follow us, they should know how do we actually operate, what is our mindset, how do we analyze the global economy and bring it down to specific countries to make them understand the macroeconomics, how the economies are working, what is the government policies, what the markets are telling us, what is the forward guidance in the currency market, commodities, real estate, manufacturing, service sector, e-commerce, and technology. So people, they get a macro view, the bigger view, the strategic view. We don't talk about tactical things, we talk about the big thing, the strategic thing, so that people, when they're making their smart decisions, they know what they have to do in the next 2 to 3 years.
absolutely. So Sean, that brings me to my next question. You're talking about speculation. You're talking about markets getting nervous with financial, facilities. Where do investors park their funds? Like, give me some solid facts that we can share with our valued investors. What was it like in 1970? I know that you were not born at that time. You were born in 1973, but your analysis about economic history is pretty because you have studied with Nobel laureates. You have been talking and you're having lunches with professors at Chicago booth. So, let's talk about some facts here.
Yes, Yusuf, I'm very fortunate that, I have studied with one Nobel laureate. I've listened to three. So they have guided me a lot. And one of the things I still remember from my Nobel laureate professor, late uh, Gary Becker, who said, if you want to understand the economy, you have to understand economic history. So once you study about economic history, it gives you a lot of insight and it gives you a lot of forward guidance. So when you're making a forecast, it should not be based on emotions. It should be based on facts and figures. It should be based on market intelligence report. It should be based on critical reasoning because obviously investors, they are going to question your premise. So I think again I am grateful to my professors. And in the last 1 year, ever since I have been on your show, we have been talking about tangible assets. And if you what you are sharing on the screen right now, the Economist issue from September 11th to September 17th,
Yeah.
it really talked about what we have been discussing, tangible assets. It talked about 1970 era, what you have shared. It talked about commodities, real estate, farmland. You'll be surprised to know that many investors in US right now, they are taking position in farmland. Why farmland? Because agriculture is becoming very, very important. You love rice, you love coffee, you love wheat, so do I. So demand of agriculture will remain high and there will be supply constraint. You see, corn prices have gone up, wheat prices have gone up, cotton is up. So how you are going to maintain that, supply demand momentum when you don't have enough supplies? So I think more and more people are going into agriculture investment, and again it's all about land. And in these tempestuous time, in these turbulent times, the only fixed asset that goes up is land. And what the Economist magazine, if you go back to that slide, and people can look for this article, it's available on the internet in Economist magazine. That's why we have always shared that, when we look at the economy, we look at the bigger picture. What big investors are doing, what sovereign wealth funds are doing, who are holding $81 trillion in the AUM, what family offices are doing, who are holding $6.5 trillion of AUM in their portfolio. They're all going into real estate. They're all going into tangible assets. They're all going into farmland. They're all going into private equity. They're all going into private investments. So I think the era is back. 1970 era has taught us a lot of things, that, tangible assets. Hold position in those assets that give you peace of mind. You cannot take position in Bitcoin, which moves like a pendulum, 30% up, 20% down, 30% up, 30% down, 10% up. So you have sleepless nights. And you don't even know when regulators will come down hard on this variable, which is created out of thin air. Chinese have come down very hard on Bitcoin. They are not
Yeah.
very much interested in this. The US regulators will also come down hard on Bitcoin. So I think real estate is that asset class that has remained in the portfolio of many investors in the last 2 to 300 years. And real estate has always given the capital appreciation, the rental yields to those investors who have held this asset for 15 to 20 years, because real estate is a long time cycle. 15 to 20 years, it's not a 1 year or 2 year or 3 year cycle. It's a long cycle. So I think what Economist magazine have shared is perfectly in line with our forecast that tangible assets will rule the asset portfolio of many investors moving forward. And why? Because when you have inflation, you want to preserve your wealth, because your living standard, it goes down, your purchasing power goes down when inflation hits the economy. So when you have stagflation, that is higher inflation, lower growth, and high unemployment, real estate, gold, silver, tangible assets, oil and gas will give you protection. So I think our forecast has been spot on, and more newspapers moving forward. I think you pick up any newspaper, Wall Street Journal, 2 pages, they have given listing of real estate. Saturday, Sunday, Financial Times, they have given listing of various countries, 3 pages. Why these newspapers are suddenly, giving more and more listing of real estate? Because they feel that investors are sitting on cash. $5.3 trillion dollars. In this COVID situation, investors are sitting on 5.3 trillion US dollars.
Wow.
Where are those dollars heading? Those dollars are heading into tangible assets.
Yeah.
So and rightly so, you have shared, this is day before yesterday, Financial Times. People can see that most of these funds are moving into real estate, and real estate is a clear winner. Nobody is even close to real estate. There's a huge gap in this graph. The line is far
Yeah.
ahead than any other asset class. So I think more and more investors, they have come to realize that, if they need peace of mind, if they need financial protection, if they need wealth preservation, if they need wealth protection, real estate, gold, silver, oil and gas, these are the real assets that can protect them.
Great, excellent. So, Sean, I know we were just talking about the you were just talking to me about the Bitcoin. I know what your take always on the Bitcoin. I always try to ask a discussion about Bitcoin, so which is very clear stand which you've got in the Bitcoin. Now I saw that it was recently you shared up an article about future of money, which China takes the lead in the digital market intelligence, which is digital yuan on that, right? So I mean, what's your call on that in terms of the digital yuan?
Yusuf, this is the new global money. The future of money is digital. China has been working, this is called CBDC, Central Bank Digital Currency. And Chinese yuan, the digital yuan, will start in February 2022 when the
Mhm.
Winter Olympics will start in Beijing. And that's a perfect timing to start the digital yuan. I still remember I shared with in one of your talks when I was talking about yuan on 7 January 2011, people were making fun of me. And the only person who believed in my insight was my Nobel laureate professor. 30th November 2015, Chinese yuan was included in the elite basket of currencies called SDR, Special Drawing Rights with IMF. And
Mhm.
now everybody is talking about Chinese yuan. So I think digital yuan is in vogue. So I have come up with a new personal branding strategy, and that is, what is in vogue and what is not in vogue, what is in and what is out. We used to say when I was in school among friends, what is in vogue, what is in vogue. So Chinese yuan is in vogue. Digital yuan is going to hit the market very soon, and those investors who are moving away from dollar, yes, dollar will remain in the market for some time for the next 5 years, but eventually dollar will lose its market share, and other currencies like digital euro, digital
Mhm.
yuan, they will take position and they will increase the market share. Eventually, dollar will come, and I wouldn't be surprised that paper currency will go away in the next 3 to 5 years. So everybody will be on digital. You will have your phone will be your bank, and you will run all the transactions through your QR code that will be installed in your mobile. So you will do your transaction. Cashless society is the new norm, and cashless society will become in vogue. And in China, more than 50% of the society is already cashless. People don't carry cash. They normally carry Alipay or WeChat. So they just scan at the stores, and the money is deducted from your account. It's very easy because eventually these currencies, they carry some dirtiness. So
Yeah.
I am very particular. I always pick up new notes. I don't like old notes because I'm very finicky about old notes. Whenever I see old note, I say no. I purposely tell the shopkeeper, please give me new notes because I love seeing the new notes. It reminds me of my time when I used to work for Standard Chartered Bank in Pakistan and Dubai. So I think digital yuan is in vogue, and many investors have come to realize. And the Central Bank of China, PBOC, the People's Bank of China, have run experiments, and they feel that they are confident. They have blocked all the loopholes, and they think the system is perfect. And eventually, I'm looking forward to getting digital yuan, to open a digital yuan next year. That is
Wow.
my one of the strategies. So I think digital yuan will, once it hit the market, it will take some of the market share away from US dollar and euro. So I think digital yuan will be a big hit to the market, and it will create quite a news in the global financial markets.
No, you rightly said that, Sean, because when talking about cashless society, I think it's been a while when now everything is so digitalized, even from your what you think about Alipay. So we got everything on the smartphone right now. Everything is there. When you want to go and pay, all you got to just tap your card on it and it's done on that. So even for myself, yes, carrying out cash is not that much. When you go to the bank, even if you go to the bank, you ask for $2,000 or $3,000 for another thing. Are you sure? What are you going to do with this much of cash on that? You got to let us know before on that. So we are heading to that area. We are actually doing that already. Hardly using the cash. Everything is going through the digital way of doing it. So definitely, I'm sure. Looking forward to see how digital will do on that. So we're going to say hi to a couple of more people. Good morning from Malaysia. Thank you, Sylvester, for joining us.
Good
And
morning.
also, good morning to Rajendra, you as well. I know that, Sean, that you have an interview coming up shortly, so I'm going to go to my last question on that. Since you know right now the elections have happened, what's your outlook for Canada since Trudeau is back? Since Trudeau is back in the driving seat, do you think like the same economic policies or any different? What's your networking saying or your source of information on that?
Yes, Yusuf, I think it will be status quo. Trudeau will maintain the same policy. They will welcome the immigrants, and they will maintain the same policy of maintaining macroeconomic stability. COVID will get more accelerated, and more people will get vaccinated. Economy will open up. More sectors will be open. Already, the economy is open in Canada, and you have shared with me that momentum is generated, especially in real estate and other industries. Canada will tend to benefit because of higher oil prices. Many Canadian companies are back on the mainstream. So once they are back, they will tend to make exports of LNG and other commodities. So I think Canada will maintain the same economic outlook. The economic policies will remain, it will be status quo. And Trudeau will welcome more and more immigrants. And I think real estate will continue to be one of the driving forces in the economy.
You're absolutely right because here the real estate and the immigrants are very very from the economy perspective are the one who are driving it, and so is the real estate as well. Though real estate has been very very hot, and we see this continue rise going on because every time when people ask me that what do I think about the real estate happening in Canada and especially in the Toronto area. I always tell them, look at the number of immigrants coming up every year. If you got, 1.2 million people coming up, 300 to 400,000 people coming in, you know, all these people, they need at least a place to live. And that's the reason I see
Absolutely.
that, this will continue to grow from that perspective. So this is what, the great thing about Juwai IQI, we're talking about the market intelligence report. We're talking to with Shan Saeed, that how, we advise our investors to invest and what exactly is the outlook for each and every country before we ask our investor to invest in any of the countries on that. So with this, Shan, thank you so much. Anything else you want to add on before I say bye to you?
Thank you, Yusuf. It was another great session. I really enjoy talking to you and my session. All I would say is that stagflation is here to stay, and the only way to preserve your wealth is by taking position in tangible assets. Real estate will continue to be a major force, and real estate prices will continue to go up in Canada for the next 3 to 5 years. The way you are talking, the immigrants are coming, and Trudeau has got this policy of welcoming those smart and educated investors. And Canada has got this perception it's a very safe, stable country, and the macroeconomic stability of Canada is at par with any other advanced economy. So I think you are in the best place, and investors should follow Juwai IQI, and they should follow Yousaf Iqbal and his team. Thank you so much.
Thank you very much, Shan. Thank you so much. So nice of you. It's always great having a session with you because I always look forward to the session and there's always so much of interaction going on. With this note, everybody, please take care of yourself. Stay safe. If you have any questions, even after the show, put it in the comment box. Or we can always have Shan, in the session. We can talk about this question. We can address it in our next show as well. So please feel free to do that. With this note, everybody, take care of yourselves. Thank you very much and stay safe. Bye bye.
Thank you.